Trader, let's hit this intro and we'll get into it, baby. All right, we have a lot to go over. First thing I want to tell you, if you see the crutches in the back, it's because this boy just had some surgery on his knee. So you can tell I might be in a little bit of pain, but I got my feet kicked up. I'm relaxed. I'm ready to react to this price action we had today. While I was under, we had a little bit of PPI that came in. We'll definitely go over that. We'll definitely be going over all of our leaders and our laggers today. We'll go through our stock screener. We'll flip through it. We'll try and find some of those some of those trend breaks that I love to play. And yeah, appreciate you being here. Appreciate you supporting your boy. We're going to see what we can do today, so bear with me. And if you have any questions, comments, or concerns, leave them in the chat. We will keep up on them as soon as we get them to come in. But once I get moving on the overall market and figuring out certain direction, it might take me a few minutes to get to you. That's A-okay. But good morning, good afternoon, ladies and gentlemen. Welcome to LoFiTrader. So let's just hop right into it. We had the CPI index that came out today, and we know very well that it came out hot. Now, if you go through and you start reading all the comments and you start seeing all the fear that's in the market, and we had a big pullback, right? Well, I'm here to thwart some of that, right? Let's see, today we had the PPI come out, and if we read the PPI index, which is personal, let me just read it verbatim so that way nobody gets confused here. U.S. Producer Price Index, okay? So when it comes to the Producer Price Index, it measures the change in price of goods sold by manufacturers. So why is that important? Well, if things cost more money and it's harder for us to pay for them, it's showing that we still have sticky inflation going around. And if inflation's high, our old Papa Powell in the Fed chair market, he is going to say, no, we are not going to reduce interest rates. We're going to keep them where they're at, which is going to continue to make it pressure on your banks. It's going to put pressure on all your businesses around you. They're going to have to keep everything high. They're going to start cutting jobs to help offset that balance of having to pay higher prices for their rents and to the banks. Okay, so when you have PPI index high, when you have a CPI index that's high, it's going to thwart people from wanting to buy into equities. They're going to want to hold into more cash, and they're going to want to go more into bonds and 10-year yields, okay? So that's kind of how the macroeconomics works when it comes to all that. So let's keep that in mind when we're going over the PPI index. So I use the economic calendar here. This is where I get my data. It's all free. Everything that I give you is going to be free. Everything I try to bring you is free, simply put, because I found it for free, and I don't think anything should have to be paid for. So when we look at the economic calendar here, we show that we have the initial jobless claims and the PPI that came out right here. We click on the PPI and it gives us a little excerpt of what exactly happened. Simply put, though, we were only 0.1 higher than the actual forecast. So when we're just 0.1 higher than the actual forecast, that just tells me that things are right around that neutral bias, right? Things are still headed in the right direction, but we still need to be very, very careful in the market. Now, when we look at the data and we analyze data, we aren't some big head honchos. We don't know all the numbers and crunch and throw them in our little data calculators. And you see that meme, you know, where all the numbers and all the analytics are flying past us, right? No, I say screw all of that. I go right to the technical analysis. That's how I make my money. That's where I like to look at the overall market because it's always forward looking. So if you look at these charts right here on, it looks like my right, but it's my left, okay? If you look at these charts here, we can go over the simple fact, and Mama, Ginger Hopper, she's here. What's going on, Mama? It's good to see you. Thank you for hopping in the chat. We have the S&P 500 right here. This is what I use. A lot of people use a lot of different things to calculate. We have, the Russell 2000. We have the NASDAQ. We have the S&P 500. We have all these different things that we can watch, we can look at, and we can learn from. Using technical analysis, we can figure out where the overall market's going. So, we were in the pre-market. If we look way up here, this is the hourly time frame up here. And if you look at the top of this, we actually hit a new all-time high in the S&P 500. Why is that important? Well, if you have a 401k, if you have a Roth IRA, if you have any type of investing account, whether it's on your own or through a business, you have reached an all-time high in your bank account. If you are invested at all in the market, you have some of the same companies that this S&P 500 holds. So when people have been so fearful for so long, I've been telling you since these March lows that we hit a bottom. And I didn't say that because I'm a Mr. Know-It-All. I just used technical analysis, okay? The October lows back here, okay? And then we have these newer October lows that came in this year, right? Last year in 23, right? So the October lows of 2022 and the October lows of 2023, okay? And since then, we've been pushing up, pushing higher, and I've heard nothing but bear sentiment. When you hear all this bear sentiment, Jacob, thank you so much. Hope the knee is doing good. I tell you, I'm trying to not take any of the pain medications that they had given me. It's water and it's ibuprofen. That's where I'm going. They say the hardest day is the third day, so we'll see how much I can actually handle. But we got to try and stay away from them nasty drugs, right? So anyway, the S&P 500 has been being absolutely crazy, volatile, and heading to the north side since these October lows of 2022 and the October lows of 2023. So what can we see in the overall market? Well, with everybody shedding that fear, everybody being fearful and being bearish, I always say, if you're going to be a perma bear, you're never going to make money. It's never going to be a good time for you to invest. Well, if you seen this pullback, this break through the 200-day moving average and a push higher, you can see the 200-day moving average is on an uptrend. So all this rockiness and this jostling and this up and down can all be smoothed out by using this 200-day moving average. Okay, even if you didn't hit these 2022 October lows and you've seen it just slowly start to smooth out, and then when you've seen a slow uptick and a curl up here and you got in somewhere around here, this was the beautiful spot. It took off, it pulled back, and it retested these same areas and hasn't looked back ever since. So, when looking at this, and we zoom in using an even closer moving average like the 10-day moving average, you can clearly tell we haven't broke down from this 10-day moving average yet. Every time we come down to this 10-day moving average in the past 3 weeks, it has touched and bounced, touched and bounced. We've had CPI data that brought us down here and it bounced. We've had PPI data that has brought us down here and now looks like it's giving us a bounce. Now, not to say that tomorrow morning we can't break these 10-day moving averages, but even then, we are still showing support on the 21 and the 30-day moving average, which simply are these red and yellow lines. Some people might ask, well, what are those? Well, it's very, very simple. The 10-day moving averages is just taking the past 10 days and plotting an average of those days on a line to help smooth out the trajectory so you're not seeing so much volatility in the ups and downs. These ups and downs, if you have too much assets in the market, will scare you out and get you out of these markets. You don't want that, okay? It just actually brought to my attention. Let's turn on some music here, baby. We got to get that lo-fi playlist, right? Speaking of lo-fi, we always want to revert to the mean. If you ever get too excited in the market, revert to the mean. Let's look at our moving averages and let's keep things lo-fi, baby. All right, anyway, back to the market. The S&P 500 has now bounced once again off that 10-day moving average. And simply put, if we break through, I'm still not in fear. We just hit a new all-time high in the pre-market. We're pulling back and bouncing again off of a 10-day moving average. It's very simply put, I'm going to need more technical analysis to put the fear in me. Rather than being fearful, rather than being nervous or scared, I'm going to look for my setups. Because every time we have pulled back and bounced off those 10-day moving averages, I have found more setups and made more money in this year than I ever have ever trading. So doing the same thing over and over again is going to keep on making me money. And if it stops making me money, then I stop trading. I sit on my hands. When will I do that? When this 10-day moving average starts to flatten out and curl back over to the downside and we break the 21 or the 30-day moving average. So that being said, I'd like to run through the rest of the market and we can figure out exactly where we are. So this is the S&P 500. You can tell we are on a very beautiful bull run uptrend to the north side, making new higher lows and new lower highs. Very beautiful uptrend. I don't even need to draw it out for you. All of your moving averages are already doing that. Now, some people might say, yeah, but tech has been taking this up. Yeah, but bio stocks are the only thing that are holding this up. Well, that's why we have an equally weighted S&P 500. This takes all of the sectors, every sector that's out there, it equally weights it, and you can see even then, we are still on this beautiful trajectory to the north side. Now, it did look like it cleared that 10-day moving average, but bounced off the 21-day moving average, just as we have multiple times back here. So again, even in the equally weighted S&P 500, we're still at a new all-time high in the pre-market before this pullback. Next up will be the QQQ. This ETF is simply all the big tech stocks. These big tech stocks like Nvidia, Microsoft, Apple, all of those big tech stocks that we all know and love. That's what the QQQ is looking. That's what's keeping us informed in the QQQ. So you have this big push up here. What's pulling it up? Well, not Tesla, not Apple, as we will go over very, very soon. But is this fearful? Are we going to have a major pullback? Well, I will say this. We are bouncing off of a 21-day moving average. It's hard for me to be fearful if we are still bouncing off of a 30 and a 21-day moving average here. Now, if this continues to curl and we start to see more of a downtrend off of this, let me just draw it out for you from the top, okay? Because we put in 1, 2, 3, 4 days ago, we hit a high, and now we're making new lower highs, new lower high, new lower high. Unless we break through this area and we set in a new higher low rather than a new lower high, I don't think there's anything to be fearful of. Now, if we do come back here and we take a look at our volume, which I can bring up a little bit bigger for you, you can see the volume is a little higher. It's a little bit more higher on the sell-off volume. This is your average 20-day in the past 20-day volume, this yellow line down here. So if you see higher sell-off volume, that is something to take note of. So if we are starting to get higher sell volume and less buying power, that looks like the institutional ownerships are starting to distribute. They're starting to distribute some of that money. Next up is the SMH. Beautiful SMH, unfortunately, looks like it has broken through the 10-day moving average. What is SMH? Well, this is the Van Tech ETF trust for the semiconductors. Semiconductors are your SMH, your AMD, your Nvidias, which we will also be going over quite a few of those stocks, but these have been relatively what has been your leader in the overall market. Let me take a quick sip. This one's for me, not for you, but we'll make the next one for you. No big deal. And while I'm talking, if you guys have any questions, there are no dumb questions. You can ask them, and if I don't know, I will simply tell you, I don't know. There's been quite a few questions in the years past. Some of the bigger guys, they come in here and they ask some hard questions, and I learn. I learn every single day. I love to learn. That's what I like to do on this channel. So SMH here, it looks like we're having a beautiful pullback. I'd like to see another bounce off the 21-day moving average. What scares me about SMH though is this selling volume up here at the top, okay? I seen it in Nvidia firsthand. Nvidia is the leader in the SMH, and it looked as though this huge pullback here was something to really take note of. Now we're starting to get some follow-through days on higher volume, on higher sell-off volume. So when you see this thing selling off like this, you have to take big note. Where is the money going? If the S&P 500 is still holding true and it's still holding up there and things are still looking nice, then we know that the sector is being rotated and the money is going somewhere else. Now, I know for a fact, only because I've been playing it, that the biotech and the health stocks have been doing really, really well. Well, the news is to come. You stay focused on this and we'll all know where the money is starting to head into. And it will be popping up for you very, very soon. Is it the small caps? No, this is the Russell 2000 small cap ETF. And you can see now we are breaking down to a 30-day moving average. And this 50-day is starting to flatten out. That is not a good sign. So we have two overall decent signs in the market. The S&P 500 is holding up. The QQQ is holding up. The SMH looks like it's curling over. And now if we look at the IWM small cap Russell 2000, which is your small and mid cap, your faster moving stocks, it's starting to break down here. Now, if we don't get a good bounce off this 30 and or 50-day moving average, that's where I'm going to really be fearful. Because the IWM has bounced off this 50 multiple times before reaching an all new high about 4 days ago, just like you've seen in the QQQ, now pulling over. It's starting to roll over here a little bit, which makes me a little bit nervous. If we don't get a good soak on this 30-day moving average, and by soak, I mean like a soaking candle where you see a bunch of buying pressure come in, just kind of like you see on this candle right here. I'll just zoom in for you. On this candle here, you can see there is actually quite a bit of soaking here. You see higher volume. There's over 10 million shares traded here. It's being soaked right up on this candle, and then your next candle also gets soaked up. So if we don't see that same institutional buying on the IWM or in the overall ETFs in the small caps, then that's when I'm going to start getting a little bit nervous. So a bunch of knowledge. Yeah. Well, I've been doing this for a little while, Jacob. I am trying to do my best to share my knowledge, but honestly, as much as I like doing this for everybody else, I'm doing this for myself. I figured, I'm stuck to a chair and I'm going to be going over this anyway, so I might as well just share my excerpts while I'm going through this. It'll help me to retain it, and it'll also help the viewers. It'll help everybody out there, that even if I can spark there's a little bit of interest in the market and get somebody just half as excited as I get for the overall market, that might be a good goal here. Next up, a lot of people use this. This is the NASDAQ. This is the futures. This is the index holds 100 different top stocks in it. And it's a little bit more faster mover. It takes a hold and changes a little bit faster than the S&P 500, but there's less stocks in it, and that would have a good reason why. So you can see here, just 4 or 5 days ago, just like in the QQQ and the Russell 2000, we hit an all-time high. Now pulling back. Is there anything to be worried about here? No. Last time we were here at the 30-day moving average, we have bounced 1, 2, 3, 4, 5 different times. Now we are here kind of trading sideways. When you have a beautiful uptrend as quick and as clean as this one, you want to see pullbacks. Let's look at our past history. When you get a huge push up, you need a pullback. You need that breadth in the market. You need sectional rotation in the market. You need to have that because stocks just don't go straight up. So we have been going straight up. We do need either some sideways action for one, or we need a pullback to this 30-day moving average and pushing higher. Now, this thing can still come back and still show relative strength in the overall ETF if we get another bounce off this 50. So we still can pull back. We still can head higher. I'm not too fearful at this time. But if this pulls back and we start to see higher volume in the NASDAQ on the pullbacks, that's when we need to be fearful. Next up, Dow Jones Industrial Average. And this is the last large ETF. And then we're going to get into the fun ones. We're going to get into the ones where you can actually start seeing some of that sectional rotation. Okay, so right now, this is the Dow Jones Industrial. This is your big boats of stocks like Amazon, like Coca-Cola. These are your big boats that are hard to move, that your grandfather still has 100 shares invested in. Okay, so when you see these move really slow. So when we see these quick moves, these quick up days, and these small pullbacks, this was amazing and fun time to actually watch the Dow Jones Industrial just take off, right? So now what are we seeing? Well, we're seeing about last month was our last high here. right? So this was 223. So what, two and a half weeks ago? 2.5 weeks ago, we had its all-time highs. The last time it tried to come up, it made a new higher low. And then it came up, broke that, but made the new higher low from the high in February. Okay, so now what are we going to see here? Well, if we zoom in, we can see that we have bounced multiple times off that 30-day moving average. Now, this time pulling back a little more, something make you a little bit more nervous, pushing up higher, but making that new lower high and heading back down and retesting that 30-day moving average. When I look at the Dow Jones Industrial here, I just think to myself, this could go either way. This needs a few more days for it to play out to show us some more price action in this area. If this price action shows bullish, well, then you know your Coca-Cola is going to go higher, your Amazon's going to go higher, your other leading tech stocks, not just tech stocks, but your leading boats are going to go higher. So let's take a look, since there's some confusion as to which direction we're actually headed. Let's take a look at some of the other markets. So let's go ahead and skip this. We are going to take a look at TLT. So this is the 20-year Treasury. The 20-year Treasury, opposed to a 40-year Treasury, is heading down, which means that the shorter-term bonds are not being bought up. It's going to show us when we look at the longer-term bonds that those are getting bought up. That is not necessarily a good sign. That's because they are expecting that these to mature. Bye, have a good day, enjoy the gym. Wife is taking off now. I'm all alone. What do I do? So this 20-year is pulling back, which is not a good sign for the overall market. If we can find some support down here at the $92 area, maybe we head back up. We will see very, very soon. Next up is Nail. So Nail is a builder ETF. So this one here is the daily home builders. Okay, so it's an ETF for builders, right? So you're building supplies and all that good stuff. We had a beautiful base here and a breakthrough, which I actually missed this break. I have a green line marked out here. I actually wanted to buy it here, the breakout of this, and it actually pulled back and created this beautiful base. And as it based out so long and created these new lower highs, I missed this. I don't know where my mind was on this day, but we had a beautiful base break as it created this really tight base, and it took off a lot higher. This thing is a faster mover at 5.2%, so this is definitely something I wanted to keep on my watch list, and I do have it here, but we missed this base breakout. Now, as we pushed higher, we started to get a little bit more sloppy up here at the top, and then now pulling back down. Our final frontier on this is going to be that 50-day moving average, but with everything else pulling back, we have to look at this volume. It is pulling back on higher volume, okay? So we really do need to pay attention and stay focused on these higher volume distribution days, okay? Next up is going to be your IBB. Your IBB, this is your biotech, your therapeutic stocks. And look at this. The therapeutic stocks looked absolutely courageous up here, breaking out of its highs, creating this little cup that you see here, and then a handle, but it did not look like it could handle it. I mean, we had these inside days, and it looked so promising. And I've been playing biotechs and therapeutics for the past, month now, I believe. And they've been doing absolutely amazing. Biotechs have been absolutely killing it. And I'm just so happy to say that I've got a good piece out of the biotechs. But if it doesn't shape up here, I am a little nervous. The last time we broke through this 50-day moving average, we did get bought up. So I'd like to see another couple of days in this. But if we have another follow-through day on higher volume, I'm going to be all out of therapeutics, and I'm going to be looking elsewhere in the hotter sectors, and then possibly some rotation into somewhere else. So where is that money going? We're going to continue to try and find it. Next up is the VIX. If you don't know what the VIX is, this is a volatility index. Volatility just means how many shares are being traded. If you have high volatility, that means a lot of people are trading a lot of shares, or a lot of institutions are trading a lot of shares, right? So when you see a high volatility, a lot of times that is correlated with a lot of sell-off. Now, if you don't know the saying, stocks usually go stairs up and the elevator down. What does that mean? It usually takes their time going up, and then they slam down. And that's usually due to panic. People sell quick without thinking when they panic. And that's just what I call caveman brain. Okay, you're making money, things are good, let's hold on. You're losing money, sell, 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 right? That being said, that's why there's a correlation with the VIX. If there is higher volatility, there's usually higher selling volume. And today we got a nice push in the VIX, went all the way up to 1525 with that selling volume from the S&P 500 being at the top, knowing that we needed a pullback, and the PPI coming in a little hotter with the CPI index coming in a little hotter. We see this pullback in the market with higher volatility, okay? Next up is our dollar. Now, I could have told you this before we even pulled this up. After seeing everything in the market, higher volatility, a pullback in the market, you're gonna see our dollar start to go up. If people aren't trusting the markets as much, you're gonna see more trust in holding on to their money. Instead of putting your money in an asset that has the potential to depreciate, people rather hold and save their money and hoard it for themselves, okay? So that's why you see a nice pop in this dollar. But you can also see I have this line drawn out. Why do I have this line drawn out? Because this line, it was acting as resistance. When we break through that resistance here, if we look right here, resistance, resistance, we break through, it should act as support. We've seen a little support here, but it flies through. We break through its resistance, we come back, it acts as support, bounces, and just blows through this. I forget what this was about. And then we rip up higher, right? We come back down, we bounce, resistance, we break through, we come back up. Now we're bouncing off that resistance / now support, okay? So we have that support here. When we have support, you can clearly see it has a nice little bounce. But is this going to continue to hold support and continue to go higher? That is going to be bad news for the bulls if this goes higher. Higher dollar, it means people are hoarding their money and they're not going to put their money into those assets, okay? So, that being said, let me just go ahead and take a little peeky gander at what's going on here. All right, so next up we have NVDA. Why do I have NVIDIA inside of this sector watch list? Well, there's quite a few reasons why. One, this has been an absolute behemoth of a stock. This stock actually has brought the market up. And personally, I found this to be the leader before anything else was happening. Way back here in the October lows, this was the first thing to really start to take off. This thing was really just ramping up and taking off before anybody else was really even watching the stock market. This thing was already taking off, already making moves. And then when we had this beautiful day on earnings and we had a beautiful gap up on earnings, I knew that this thing had plenty more room to go. I had been preaching to my friends and my family about NVIDIA at this $500 area. And as you can see, I did play this $500 area. Now, I should have made a lot more money off this $500 area. After everything I preached, I did not make nearly as much as I should have off this $500 area. But hey, you win some, you lose some, and sometimes you wish you made a lot more. So that being said, I did play this $500 area. I wish I had better sell rules at the time. Thank goodness I met a good friend and mentor, Adam. He is my data analyst and my editor. He is an amazing guy. I am just so pumped to be in business with this guy. And now we have beautiful sell rules. Now my sell rules, I would have actually held this thing on all the way until it broke the 10-day moving average up here at 721 rather than selling in the 600s. Okay, so yeah, sure, I lost about $100 a share, but you live, you learn, and hey, next time we see a beautiful trend leader, not a lagger, but a leader in the overall market, I'm going to learn from this, because remember, you are a loser unless you're learning, am I right? So, NVIDIA, an absolute behemoth of a stock. I actually got in on this trend break here, but we'll go over that a little later. This right now is trying to hold this 10-day moving average, okay? This 10-day moving average, if this gets broken, I'm going to see more sectional rotation. And I am actually expecting this to break, okay? Because we made a new high and a new higher low here, I'm expecting this to maybe even bounce, but make a new higher low and possibly break through. And it's going to be unfortunate, but it's a-okay. Sectional rotation is bound to happen. Not every stock is meant to go straight up forever, ladies and gentlemen. I hate to be the one to break the news to you. Next up is SMCI. This is also going to follow NVIDIA. You can see we made a new higher low, new lower high here. And you can see it has moved just like NVIDIA after its earnings, after it's found this play range right here. If NVIDIA breaks the 10-day moving average, I can almost guarantee you that you're going to see SMCI, another beautiful stock in the semiconductors, break its 10-day moving averages as well. Next up is Tesla. Why do I look at Tesla? Because everybody used to use this as a benchmark. Tesla this, Tesla that. Tesla is not doing well, ladies and gentlemen. Anytime you see a stock below a 200-day moving average, and if anybody puts a stock for me to analyze, that's the first thing I look at. Is it below a 200-day moving average? Well, if it's below a 200-day moving average, I don't want to see it. I don't want to even take a look at it because it's got so much more proving to do. So any stock that's below a 200-day moving average, my hands are clean of it, and I'm here to sit back, relax, and wait for it to prove itself to me. Okay? Next up is going to be Netflix. Now, this is where things start to get a little interesting. We are still seeing strength in Netflix, okay? And I tell you, I gotta bring up quite a few different things when it comes to Netflix here. I'm live, brother. I'll have to call you back. Go ahead and check me out on YouTube and watch me live, brother. That's my buddy Tony. I hate it. I've had to miss his calls a few different times, so I kind of feel bad there. But let's see. So Netflix actually has this beautiful uptrend. It's holding its 10-day moving average. And if we look right here, it had this beautiful trend break. But what did it do before it took off higher without me? It had this breakdown. It shook me out because I actually got into this trade and it shook me out. It shooketh me out good before moving up a lot higher. This thing, actually, this would have been a beautiful, before it stopped me out, 6.29% move on a 2.2% ADR stock. So I would have gotten 3 times its average daily range before actually stopping out on this. And that would have been, let's see, my stop out would have been 0.82. So that would have been a great risk reward on the stock. But would you stay in Tesla if I've had it for a few years? So I honestly believe Tesla in the long run is going to be absolutely amazing, you know? So when you're talking about investing, Easton, and that's actually a really good question. When you're talking about investing and we look at this overall market trend, you can see that Tesla just blew up. It was absolutely crazy and nasty. And you know, Elon Musk himself even said it's been overvalued up here in this area. And he was right. You know, everybody knew it, but this is what happens with hype, right? So depending on where you have it, sure. But if you do truly believe in a stock, you know, if you truly believe in it, why wouldn't you hold it, right? Now, I'm not the one to tell you to buy or sell any stock whatsoever. I'm not a financial advisor, and I'll always tell you to seek a financial advisor. But if I had been holding Tesla, say, all the way down here to 123, I'm not going to let go of Tesla, especially depending on what kind of stocks and what type of investing you're doing. But me playing a swing trading outlook on Tesla, no way. I would never touch this thing until it's above a 200-day moving average. Right now, it's starting to curl down. That 200-day moving average is starting to curl down, which shows me it even has way more proving to do, okay? So that being said, if you've held on to it and it's a stock that you believe in and you believe in their self-driving vehicles, you believe that, I mean, they just put in a huge purchase to NVIDIA for their future self-driving behemoth of software. You know, I do think Tesla is the future, but I still believe that they are overvalued. And I believe eventually, yeah, it's actually going to, it's going to be back up here to its all-time highs. But when? Nobody knows. Nobody really knows. Jacob says, what would be a good stock to start with if you aren't in any? Well, Jacob, that's actually a really good question. Let me run through these really quick, and we'll actually go over some of the picks that I would we'll just get right into it. If you have money that you're willing to invest, I'm not here to tell you where to put your money, but I will tell you the safest way to invest your money would be into VTI or VOO. VTI is a little cheaper than VTO, but why do I recommend VTI or VOO? Because it has been proven that if you take and dollar cost average your money in to the overall market, you will see significant returns of 8% year over year. Now, you have to have at least a 10-year span to ensure that you're going to make money, and we are at all these all-time highs, but it's never a bad time to get in, but you have to make sure you're always going to hold on to those shares. So I have some money in the VTI because I wanted to get my brother into the market. Okay, I hold about 18 shares. 18 shares. Now, it's not much, depending on, not much is relative, but 18 shares at $243.79. Okay, every time he buys a share, I buy a share because I'm the one that told him to buy into this. So I take my money and I put it where my mouth is because I want my brother to I want him to be insured that he's just not getting crap advice from somebody. I'm actually going to do exactly what I'm telling him to do, and that's dollar cost averaging into it. Now, let's say this thing pulls back below 243, which is relatively close, right? If we zoom out, I'm right here on 243. Can the market pull back and go lower than that? Absolutely. What happens if I start losing money on my investments? I buy more. I dollar cost averaging into this. This is for my future. This isn't a get rich quick scheme. This is a slowly buy, let your dividends keep going in and rebuying. Your dividends will constantly put back into your account, and you keep buying these same VTI or VOO, which is just a market. It's just following the S&P 500. So the question is, what would be a good stock to start with? I wouldn't say a stock. I would say an ETF would be good to start with. That's the safest possible thing that you could do with your money. Now, when it comes to the stocks, I can show you what's leader, what's a lagger, what might be a potential to put on your watch list, but I can't tell you what to buy or what to sell. So we will actually go over some things that I found quite interesting in the market, and we're going to do that now. So we went over Netflix. Now, Microsoft. Look at Microsoft, ladies and gentlemen. Absolutely beautiful. And I also drew this trend line too. You're going to find out that I absolutely love trend breaks. And this was another beautiful trend break that came down and retested that trend break before breaking out even higher. So there were two spots we could have got into Microsoft. Why is Microsoft doing so well? Well, I don't know if you're familiar with AI, but Microsoft is leading in this AI space with their Copilot. There is so much going on with Copilot. I mean, I could bring up Copilot right now and look at, I mean, this is me sometimes when I win in stocks, right? Copilot, all I wrote was make a man so excited he looks scary, right? And I put it in Copilot, like to make him look like he's in the stock market, so, that's me, right? So that there is just why I think Microsoft's going to be, now Microsoft has more than just Copilot, but I'm saying when it comes to the hype in AI, I think Copilot is doing an amazing job. And I think Copilot is doing a great job taking the business aspect of it, right? We have AI to do so many different things, and they simply are just putting it into business, just like Microsoft did, Microsoft Office and Excel before anybody else did. You can see that they're actually taking what they have and they're going to put it to use in the business area. So Copilot, wow, I believe in Copilot. I think Copilot's going to be amazing. And if you haven't messed with Copilot, you really should mess with Copilot. You really should. It was just a free update on any Microsoft computer. You should check it out. No, they aren't sponsoring me, but Bill Gates, if you're out there, if you're listening, that would be amazing. Just a couple million would be great. I can quit my job, quit my day job, right? All right, so next up is going to be Amazon, AMZN, also defying the pullback in the market. So as the semiconductors that were just leading, the tech that was just leading, now we have Microsoft, which is tech, and Amazon, which is also, what would you consider Amazon? Oh man, I'm having a brain fart. But another behemoth of the stock holding up there at these highs. Now it's running right into an area of resistance. So if we go back here and we look, I can go ahead and pull this across. So that way here, let me just blow this up for you guys. We'll bring it back to what we are. But here, let me just go like this so you guys can see. What do I mean by resistance? Well, up here, you can see this red line that I have drawn. You can see it's touched 1, 2, 3, 4, 5 different times. And now we're finally back up here at this resistance level from back in 2020 to 2021, a whole year of sideways action here before we seen a huge downturn, and now it's back up there and it's holding out. So what do? I draw an area of resistance just so we have a better understanding of where this plot might end up landing. So if it can break up through this area, and sideways action is not bad here. Sideways action can show a lot of people buying in at these highs, or it could show distribution. And that's why we want to look at the volume. As of today, we have higher buying volume on this stock. As the market pulls back, we are seeing higher buying volume in Amazon. So people are resorting to buying into Amazon and Microsoft while the overall market is pulling back. So that's an actual beautiful thing to see for an Amazon bull. Okay. Let's take a look at one of my... Ooh, easy there, killer. All right, next up is Meta. So Meta also pulled back with the overall market, but it's finding some support here on the 21-day moving average. That's an absolute beautiful thing to see. Apple, let's see how Apple's doing. So it looks like Apple had a nice day today, a little bit of a push higher, but a neutral candle here, finding resistance in this 173 area, but below a 200-day moving average that looks like it's about to curl down. So I don't trust and I don't believe in Apple at these lows here. Why don't I? Simply put, that 200-day moving average is my proving point. Now, if we see a breakthrough the 200-day moving average like we did here, and then a breakthrough and a retest before climbing higher, you can see I have all these areas marked out the last time we were down here, then we might want to find an area to invest. But because it's broken down, I need it to prove it to itself, because these things below a 200-day moving average can simply move lower. It's that simple. Next up is Google. Now this is a beautiful thing. I drew this trend, and why am I, I'm showing you all these trends that I missed, right? I'm gonna have to show you a few beautiful things that I actually got into. But Google on this downtrend broke through. I was actually talking to my buddy Adam, and I said, man, Google bounced off a 200-day moving average and it came back up into this trend line. It's looking like a good short here, but I decided not to short it because the 200-day moving average is showing its support. What's going to happen here? I need to see a few more days of price action, and I'm glad I waited because it traded sideways, proving itself, and then that next morning taking off like a bat out of you-know-where. So it took off here, and we are going to see continuation, hopefully, for Google. And this has been a lagger compared to the rest of the tech, as the other tech stocks like Microsoft, like Apple, they all breached their highs, where Google never actually broke these highs, right? Meta, let's use Meta as the benchmark. It broke its highs a long time ago and on huge volume, as to where Google still is trying to fight these highs, right? It did break out, but look what happened the second it broke its highs. When it touched these highs, its all-time highs, it just completely doo-dooed the bed. This is not what you want to see. Jacob, gotta go, buddy. Thanks for the info. Absolutely, Jacob. I do appreciate you stopping in and showing your support. Thank you very much. So the next few stocks, these are going to be very speculative, but I do like to take a look at them. Mara, lovely Mara. It's a Bitcoin miner. These Bitcoin miners can be very volatile, but with Bitcoin, which we might as well just look at first, bada bing, bada boom, Bitcoin had a nice pullback today, but still above a 10-day moving average. Bitcoin has been an absolute monster, breaking its absolute all-time highs of $68,000 69,000, right? 69,000. Let's just use 69 as our benchmark there. And now is trading at 72,000, right? It went all the way as high as to 74,000. And that's a beautiful thing if you're a Bitcoin bull. So the issue I have with Mara, your Bitcoin miners, and CLS, your clean Bitcoin miners, simply put, is the fact that they are not showing relative strength with Bitcoin, right? Bitcoin showed strength, they were showing strength, but then when Bitcoin continued to show that strength, Mara and CLSK and Riot all had a pullback. So, that being said, we can carry on. These Bitcoin miners are looking weak. Will it help drag down Bitcoin? Will Bitcoin have a pullback before another push higher? Or have we reached the tops? Only price action will tell. I do like to keep my eye on Snap only because everybody has been watching it. And I personally think that Snap eventually will get bought up by one of these bigger companies for all their data. They have tons of data on a lot of people. And I think it's a great stock. I actually still, not stock, but app, I actually still use it. Maybe because I'm a boomer. Maybe because it shows me my memories in there and I am addicted to those memories from back in the day. But I think eventually, one day Snap will be worth something to someone. But as of right now, below a 200-day moving average, Snap is not looking good. So now let's look at gold. I brought up gold before and look at this beautiful trend. I love this trend. What's going to happen when gold futures breaks through this trend? Well, I will tell you this. When gold futures breaks this trend, I'm going to find a fast mover in the gold market, and I'm going to take a nice little payday and not sleep on gold, because I do think gold breaking these all-time highs here is going to be absolutely beautiful for the overall market. So I got to do a little something down here. My foot's going numb, which is not good. Help me. Help me. Help me. So next up is going to be XOM. Why do I look at XOM? Because if XOM's doing well, that is your oil. If oil's doing well, they used to have a correlation. When oil was doing well, the market was not doing so well, right? But I don't know if that correlation is so true, although we are seeing it a little bit. Above a 200-day moving average now, pushing to 111.47, 111.64 in the after hours. It looks like gold is having black gold, right? Oil is having a beautiful debut at this area. I actually marked this low. I was gonna actually start buying up oil down here, and I actually never did, just because I'm not that kind of a trader. This would be more of a position trade because it's a very slow mover at 1.5%. Because I would have to take a position in this rather than a swing, I didn't want to waste any of my capital in that area. Next up, we have CL, which is sweet crude, which you can see it's going to move a lot like oil. So we are back up at these resistance areas. Might be a nice area for a short, but these aren't buy or sell recommendations. You know that. I like to look at ARK just because old Kathy Wood is doing her thing. We're going to see if it can stay above a 200-day moving average. TAN is your solar panels, your clean ETF, right? Below a 200-day moving average. Not looking at that. And we have HACK. So HACK is a software ETF. I absolutely like watching. I'm sorry, not software, but cybersecurity ETF. I like to keep an eye on this because I would like to see some sectional rotation into it, but it looks like it had its run, big pullback, push up, and now retesting a 50-day moving average. So now, another thing I like to do now that we went through all of my ETFs, yes, I do this almost every single day. We're going to run through your monthly stocks. And when I do this, I actually run through these really quick. So I'll probably be just doing some jibber jabbering while I'm doing it. I'm actually looking for a beautiful trend. If I find a nice trend, whether it be on the hourly or it's on the daily, I like to mark those. I like to set my alert and then wait for that to alert me so I can come back and play those. So like this, in a sense, here's CELH. We're having a beautiful hourly trend pullback on this, but it's not enough of a pullback where I want to see it on the daily. So I'm going to keep this in mind, but CELH has been a leader in the overall market, so it is nice to see it finally having a pullback and possibly giving me an opportunity in the future to get in. So these aren't all just stocks that I constantly watch. These are actually on a scanner that show me what has been relatively strong. Here's Root, absolutely beautiful of a stock. I did a little paper trading on this because I'm trying to get better at shorting these huge run-ups like this. And there's a reason why I only paper trade in the shorting of huge run-ups like this. And that's because I'm not good at it. I'm only good at trend breaks. So if I want to get better at something else, we're going to do it in the least or the best cost-effective way, and that would be simply to paper trade. So would I have made money on this? No, I would have stopped out using $60 as my stop. It would have stopped me out, so I'm glad I'm still just learning, but it's creating this range here. And if it continues to create this range on an uptrend of a 10-day moving average, now we might be looking for a base breakout. That's right, Adam, you heard me right. We might see a beautiful base breakout on ROOT, which had an amazing run up and now is holding all of its gains. So we'll set our learn for a nice base breakout at the top there. DTST, beautiful. SMR, nothing much to see there. And I just run through these and I'm just looking for a trend. I'm looking for a trend, and you'll see these trends. They're going to see a couple pop up. Right here's a beautiful one. MOD, Modine Manufacturing. So if we want to, we can even look up what is Modine. Okay, so I come over here into my my trader view, and I type in MOD, and I can even pull it up on here on the screen for you, so you can actually see it for yourself. And I'll just read it to you. Let me take a quick sip. Modine Manufacturer engages in the provisions of thermal management productions and solution. It operates through the Climate Solutions and Performance Technology business segment. The Climate Solutions segment provides climate-controlled solutions and components, heat transfer products, heating, ventilation, air conditioning, and refrigeration products. The data center cooling solutions, the performance technology segment design and manufacturers air and liquid cooled technology for vehicular stationary power, and industrial applications. In addition, the performance technology segment provides the thermal solutions to zero emission and hybrid commercial vehicles and automotive customers and coating products and the application services. The company was founded by blah, 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 blah. So why do I look at that? Because I want to know what section this is. If I'm seeing a hot sector that looks like it's setting up for another push, I want to know what else is out there. Well, MOD looks like it had a beautiful push up. We're having a pullback. I'm seeing a trend on the hourly and on the daily. So I set my alert. If I see a breakthrough on higher volume, then that is going to be a good sign. One thing I do want to take a note of is that it looks like at the end of the day yesterday, we had a big sell-off volume come in here, and that needs to be taken note of. But if it breaks through this area, we might see more buying power. So I want to see higher volume, a big breakthrough here, and I might be able to take a nice piece. This thing moves at 4.9% ADR. So if I'm going to use previous day as my stop, then I need to get in this pretty early. So I would need to make a decision almost right after my alert goes off. So I'll have to be quick on this one, maybe setting my alert right away. If you have any questions, please just throw them up in the comment section. I promise to get to you. So we're going to go right back to our list here. MOD is looking good for a breakout, maybe tomorrow, maybe never. MIKT. So now we're going to continue through this. We're going to look for more trends that could be broken. I look first on the hourly here. So this looks like something that could be setting up. This looks like a nice trend. It's only a 2-day trend. If I look on the daily, you can tell it's not setting up just yet. So then I come back over to my stock. Here's SOUND. A lot of people have been talking about this, but it's not setting up yet for me. Right here, HMY. Guess what this is? This is in the gold sector. So like I was telling you on that GLD, we had that amazing breakout, a beautiful pullback. Well, HMY, Harmony Gold. I put this on my top 3 stocks to watch. And why did I do that? Because it moves 4% average daily range, meaning this thing can actually get up and go as to where if you buy buy GLD, GLD is only going to move 0.7%. So you'd have to use a lot of capital at $200 a share, a lot of capital in order for you to actually make any kind of money in that stock. So we look for something like this, HMY, where we can actually move faster with less capital. Okay, so at 773, we can buy quite a few shares of this while this thing moves higher. Now, I have my alert set for this area. I don't like buying extended from the 10-day. Now, I have bought extended from the 10-day. I've not gotten burned on it yet, but I do like seeing this HMY in a hot sector. And if it breaks up through, I want to be alerted so I can at least readjust my alert or at least watch how this thing moves. Let's continue. We're looking for trends here on the hourly, and if we see something we like or we're starting to see relative strength in the market, we want to take note of it. It looks like a mining company here. So if we're running through and I see, 5 or 6 different mining companies are getting attention, then I want to find the ETF in the minings. I want to see where it's landing, see if it's hitting resistance, see if it's creating some type of base or something that we can break out of, and see where things are going to go. Silvercrest, it looks like it's hitting resistance. Okay, so this one here, this is something to look at. See how it's creating this range here? We have this big break up, this pullback, and now it's creating a range here. If we look in here on the daily, you can see we have this big push up, a pullback, and it's following this 10-day moving average very, very nicely. This is something my friend Adam likes to see, especially these breakdowns and these big buy-ups. So I'm just going to mark this because it's actually doing really well. AXTI is actually doing really well after earnings. So it looks like we had an earnings beat. Of course, it's beat by double. Let's just see what AXTI is. And this is what we do. This is what we do here, because then we have a better understanding of what's actually making moves. Designs, develops, manufactures, and distributes a compound and single element semiconductor substrates. So this is in the semiconductor area. It's going to help produce and manufacture for those semiconductors. Okay. Let's carry on. Carry on. I'm not going to try and sing. BYON. That is Beyond Incorporated. Is that Beyond Meat? I don't think it is. No, it can't be, because Beyond Meat is now a penny stock. So this is Beyond. So Beyond is, let's just see, engages in the provisions and commercial platforms. It offers furniture, home furnishing products, and services. All right, so furnishing. Very interesting. If we look at the daily, you can see it does have a trend. It doesn't look like it's held the 10-day as nice, but a big push up higher. Now coming back, getting soaked up off the bottom here, and it might break through this trend. This thing might trend higher. So I have a trend break located on the hourly. It looks good on the daily, and I have it marked out so that way if it breaks through. The only thing it doesn't have that I like to see is a new higher low. So when I see this alert possibly go off tomorrow, I might actually want to wait and see what's going to happen, because this new higher low, this low should be higher than this low. That's why I say a new lower high. So this high should be higher than the previous low. Next up, TRVI. This looks like a interesting base setup here. It looks like it's already breaking out actually. So it looks like I missed my mark in this one, but this might be, so this is therapeutics. So that's interesting to see that a therapeutic stock is breaking out. We'll see how that acts tomorrow. I'm actually into therapeutic stocks, but we'll go over the last 2 trades that I'm in. I actually stopped out of, I had 4 trades total. I stopped out of 2 trades, taking a small loss, but I have quite a few dollar bills, y'all, still that I have not expunged from the overall market. Next up, CDE. Let's just double check on this one. Okay, so IAG. Oh, this is another gold. See, this is what I mean about we seen that gold broke up higher, and now we're seeing these setups in gold, right? So I'll just adjust this a little bit here. We'll get this set up so it looks clean. You can see that we had a big move up. This thing moves 5.3%. So I actually have a gold and miners down here. I'm just going to add this to it. because simply put, these are moving faster than what's on my watch list. So if gold can continue its trajectory, now I will say IAG is in its resistance area, but it's at least showing strength. So when my gold stocks start going off, I'm going to choose which one's the strongest. This one doesn't look as strong, but it is a faster mover. So I'll just go ahead and mark this out right here, create an alert, so that way I have something to look at when it does go off. Let's continue. And I just run through these fast, guys. I make sure that if I'm not seeing a beautiful setup, if I'm not seeing something looking amazing like this beautiful thing, Lantern Pharma, what is going on here? Nice push higher, beautiful, beautiful basing here. I mean, this is something that you can draw on both ends of the spectrum. You see this beautiful uptrend and you see this beautiful downtrend here. Looks like it's just getting really tight in this area. I try to leave the biggest wicks off because that's just showing panic. But look at this. Look at that beautiful thing. So maybe pharmaceuticals aren't done yet. We're going to have to see if this thing wants to break up to the north side. I mean, this thing is freaking moving, guys. 6.68% just today on that small move. Let's see off of the base here. So off of the base here, it went up over 115%. Imagine catching this stock taking off the base. Now I will say on the 18th, which is only in less than 4 days total. So that would be what, Tuesday? Tuesday would be let me see, the 18th, Monday. Sorry, is it Monday? No, Wednesday, I'm sorry. So Wednesday is going to be its earnings. So if we were to play this, it would have to be for a quick play, and we'd have to dip out of this before the 18th because you don't want to be holding on to this thing during earnings. CRBP, I'm going to keep running through this. Things are looking good, though. Things are looking good. So I see an HEAR. This was going to be an EP this morning, but clearly it did not work out as well as it should. You hear me? Let's keep on moving through this. We'll see if we got anything else beautiful setting up. Biotherapeutics still look like it's holding up well. So this is not the cleanest downtrend here, but I do like the way it's looking. So we'll just go ahead and mark this out and maybe put a nice alert over top of it. So that way when my alerts start going off and I see a bunch of therapeutic stocks going off, then I'll know what exactly is happening. So we're going to run through a few more of these, see if there's anything looking pretty on here. Coinbase, pulling back, Lyra, Powell. Oh, look at that. All right, so that's looking pretty. That's ELF. So ELF is a beauty stock. Now I will have to say, I was looking at this before, and ELF is starting to look a little choppy here. When I see that chop, I start to think distribution. Why? Well, because you and I aren't going to move it this much. You and I aren't going to take our $1,000,000,000,000 accounts, but the big guys are. The big guys are actually going to take these $1 trillion. They're going to put their millions and millions of dollars of shares worth in and out of here, and they got to do it when it pushes up here. They're selling into that, guys. They're selling all of that at once, and they're letting it come back up and get bought up, and they're selling into it again. And so they're distributing. So to me, this looks like distribution, but just in case it has a nice break up through and we start to see accumulation again, I'm going to put my alert just above that, but I know to be careful. So the more distribution I start to see in the markets, the more I start to fear the lows, the more I start to fear a big pullback. All right, we're going to go through a couple more of these, and then I want to go through the Richard Moglen stocks. I call him Richard Moglen stocks because that's where I get a lot of his ideas from. What is this? Grayscale Ethereum Trust? Interesting. That looks like a nice trend, but it's not holding any. It's not holding any of those. So I think I'm gonna call it quits on the stock. The tickers here, because FNMAS, man, this thing, I could have made so much more money off this stock, and I just was not there to buy more shares. I bought like 100 shares of this, and oh man, I was so sad when this thing moved up $1 and I only made $100 on it. It was the most embarrassing, really. But yeah, anyway, FNMAS almost looks like it's setting up again, but I'm not messing with the stock anymore. JMIA. Yeah. All right, so now I'm going to look through my overall, my larger, my more interesting stocks. And I'm going to start from the bottom because I like looking at the ones that I've already looked at. So Pay looked like it was a beautiful move. That was almost an EP, but it took off on a trend break to the north side. ON looks like after that huge sell-off, it got bought back up. So that's nice to see. It's definitely one that you want to keep on your watch list. FCX, so this is part of the gold miners. I believe this is a gold miner. FCX, yes it is. And it looks like it's coming right back up into this resistance area. Here's the thing with this though. This looks like it's setting up just like GLD was setting up, but it hasn't broke out yet. So see how, if you look at the overall, how gold just kept hitting, bonking its head, then got tighter and tighter before breaking higher. Well, what did I say it was? FCX, right? Freeport McLaren, yeah. FCX is doing the same thing, bonking its head, 1, 2, 3, getting tight, and now it looks like it's going to try and break through. So we'll see if it wants to mimic gold, but it did move higher on this day on a lot higher volume, very, very high volume in comparison to all that. So we'll see what it wants to do there. We have TECK. That's absolutely beautiful. Looks like it's trying to push higher and hold. We're going to see if that will pose a nice trend break to the north side. And Suave, so Suave, this is Shockwave Medical, so it's in your medical field here. I've been putting these alerts just above this because of a nice cup with handle. If this thing can break out higher, or even if you want to call this a cup with handle here, if this thing can break out to the north side, this used to be a former leader. It was showing a lot of potential before doing this huge dip here. I mean, I remember when it did this, I was doing a lot of watching on this, and I really thought this thing was just gonna rip tater chip. Actually, I think I tried to play this breakout back in the day before I got stopped out, losing a little bit of cash, trying to learn these cup and handles and these breakouts. I'm glad I switched to trend breaks. It's just it's helping a lot more, you know. It's helping a lot more playing those trend breaks instead of trying to play breakouts. All right, let's take a look at a few more Square. Let's see, or now Block, right? We're supposed to call it Block. So it's still holding up from its gains, from its surprise EPS of, wow, it surprised EPS almost by double, which is a beautiful thing to see. Is it going to hold out here? I don't know. It's a 4.1% average daily range mover, so that might be a decent one to keep an eye on. Now, HIMS, this thing's absolutely beautiful. If it can hold this 10-day moving average, that would be a beautiful thing to see for this stock. I looked a little bit into its financials, and I tell you what, the financials were a beautiful thing to look into. They're making money hand over fist right now, and if they can keep on their trajectory, I'm starting to see it pop up in a bunch of ads. If you know what it is, you know what it is. If you don't, look it up. But you know, this is for male, for the males and females, for the old and we'll see how it does. But I think they're doing a great job advertising, and I think it's creating a lot of revenue. MSTR, and now this is going to follow your Bitcoin. We went over MicroStrategy and how Mr. Saylor, the CEO of this, every time he makes more money with his MicroStrategy, he's buying and investing more into Bitcoin. Okay, and obviously it's a beautiful move. If you don't know this beautiful trend break here, I mean, look at this. This is what I mean by trend breaks. They're all over. It gets really tight. Following a 10-day moving average, you can use the previous day as your stop loss. So let's say we bought this trend break and we used this stop loss of 6.22% on something that moves 10.8%, and we're still holding because it never broke a 10-day moving average, we'd be up 135%. Why am I not in this? Don't ask me. I'm kicking myself in the butt to this day that I did not invest into this beautiful, beautiful stock on this beautiful trend break. I'll go over some of my bigger trend breaks, or you can check out my shorts on YouTube. I have all my trend breaks, all my best trend breaks on there, and we'll go over how I do them one day. CLSK, this is just one of the miners for Bitcoin. Mara, we already went over Mara. Here's Base. base is basing out. It does look very, very nice actually. So I'm going to go ahead and put my my alert just over this to see if it wants to take off. I want to know when it does. Now, what is Couchbase exactly? If you guys have any questions, just throw them up in the chat. I'd love to go over any stock that you're watching, although I am losing my voice, so bear with me or bull with me, depending on which side you're on. Couchbase engages in the development of document database management solutions. It offers a Couchbase platform to build enterprises' web, mobile, and Internet of Things of application that supports massive data volumes in real time. The company was founded by Phillips James Dustin Salings. All right, cool. They were born in 2008. All right, so above a curling 200-day moving average, now following a 30-day moving average. The last time we've seen it on the 30-day, it decided to move higher. This thing moves 4.3% on an average daily range, so that's absolutely beautiful to see. So we want to keep that one on our watch list for sure. Let's move on. CrowdStrike. This is definitely one to keep on your watch list. This is one in that database solutions. We had a huge move on the earnings. Absolutely beautiful mover. It beat earnings it was just a huge beat. I wanted to play an episodic pivot on this, but when it opened up, it just flushed and never created any room for me to get in. So now I'm just waiting for either a base break or if it can pop up back again, pull down, follow a 10-day moving average, 21 or 30, and then we can play that trend to the north side. What else do we have? BVN. BVN already took off. I believe this was a nice base breakout. If you guys want to know what base breakout says, here's a trend break. Beautiful trend break here, which actually would have stopped me out if I would have got into this. Actually, I wouldn't have, because I would have used this previous day. And you'll see plenty of times, I'm going to miss a lot of trades, but I'm going to get into a lot of trades too. I just try to take the best trades. This is also your base break. Okay, so it hit this base 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 before actually breaking through. When these things break through, a lot of times they'll come back and retest. So you'll see here, it broke through and it came back and retested this area before taking off to the north side, coming back down, getting soaked back up, coming back down, getting soaked back up. When I say soaked, I'm talking about these wicks on the hourly. They're coming down, but they're being bought right back up. So it's actually really, really good to see on these base breakouts. Every time they want to come to retest, you see institutional ownership coming in on volume, as you can see here, buying this stock up. So BVN based out very well and did a very nice job heading to the north side. PLTR actually stopped me out today. I wanted to take a nice trend break on this using previous day as my stop, and unfortunately it stopped me out while I was in the hospital. Unfortunately, getting knee surgery, I had to wake up to a small loss. We took about $120 loss on this, which is just chump change compared to what some of these trends have paid me this month. But that is just all relative. That might be absolutely nothing to you. It might be something to someone else. So I shouldn't even bring up dollar, and we should only use percentage loss. When it comes to percentage loss, it was about 1%. It was more like 0.5% or 0.03% of my account currently. So it was a 0.3% loss in the overall count, which is no big deal. VKTX, I told you to put this on your stock watch list a long time ago after this thing had a beautiful pop to the north side. Now pulling back, finally finding some support on this 21-day moving average. I'm just going to go ahead and adjust my alert, so that way if it comes up and starts breaking up through here, I want to be alerted to know where this stock is actually at. Because if this thing had such a beautiful push right here and a pullback, I think we're going to find somebody is going to be willing to buy. And this is also beautiful on the VPN, the volume, or a VPC, volume price contraction, meaning we get a lot of volume here. And as this volume pulls back, you can see there's not a lot of volume being traded here. So it is in a contracting pattern. Okay, I like to see that. Mark Minervini likes to see that. Not putting words in his mouth. He might not be looking at the stock at all, but this is what I've learned from some of our leaders in the market. Our leaders, meaning our leader traders. LRCX still holding up there, but not showing me anything. Look at this trip, TRIP. Now this thing only moves 3.1%, so it's nothing too crazy, but it almost looks like it wants to break out in this area, creating a new lower high. So this might actually be a beautiful move to the north side, breaking out on this. So I'm going to go ahead and set my alert to see if this new lower high wants to push out on higher volume and see if I want to get into TripAdvisor, guys, TripAdvisor. CRSP, this thing just continues down, now retesting that 50-day moving average. I don't even want to look at that right now. ALT, nothing there, nothing to see. PSTG looks like it's making a nice trend right here. That's nice. Here's a nice, beautiful trend. Come on. Here we go. And we'll have to come back and take a peek and look at this. But it needs to make that new higher low. I'm not trying to catch a falling knife on this. And it needs to make a new lower high. So what do I mean by that? I mean, if it's going to create this low, it needs to move up and make a new lower high, stopping somewhere right here the next day, and then breaking through and heading higher on volume. If you're just with me, thank you so much for joining me. Make sure you hit a like. And if I am bringing you any value, any content of any type, entertainment or value to this community, please hit that subscribe button. We are here pumping out content every single day, about 2 pieces of shorts. We try to go live at least once a week, and we come out with educational videos all the time. So make sure you hit that like, hit that subscribe, and that notification bell if you feel so inclined. Dell Computer, huge pullback here. AI, I mean, I like to keep this one on here because it was a hype stock. Coinbase, it's doing the same thing as the miners, although it is showing more of a leader than the actual miners. SMCI, we already went over. ARM, also something we've already went over, but I will say this. I do like ARM's trend better than I like any of the other trends. So I'm just going to go ahead and pull that out and put an alert over it. That way I can be informed. But ARM still looks like it's doing a nice job maintaining all of this beautiful buying power. I was actually able to get and be a part of this episodic pivot here. I'm very happy to say I got to be a big part of that. So let's see here, guys. I think we're good with that. I think what we'll do is we'll go over the trades that I'm still currently in that I could possibly easily get stopped out the next day. So we'll start with DYN, which is in the therapeutics, guys. The therapeutics have been absolutely fiery, hot, flaming Doritos in this situation. And this here has printed me off so much money. I actually made a YouTube short out of it, and my good friend Adam did the editing. He's just killing the editing right now, doing an amazing job. I absolutely love it. But we got in at multiple stages, a base breakout. Look at this beautiful trend. This is what I mean, guys, a beautiful trend. It's showing a new higher low, and then I bought after it broke that new higher low. Right here was my next buy, and then we had a beautiful move up. I mean, we had multiple buys, even back here. But anyway, I want to show you my most recent ad. This trend break here, I didn't buy because it didn't show a new higher low. But after seeing this make and hold, the next day I bought on the break of this area. It pulled down, held, and pushed up higher. So I added 200 more shares to an existing 28 shares. This thing pushed up higher, and when I earned that 1-to-1 risk reward, I got out half of my shares. So landing me, a nice chunk of change. And then I can move my stop up from this low of 24.80 up to my break-even area of 25.56. Okay, so right now, let's see, I'm holding 128 shares left of this. So we still got a couple $100 floating around in this, but it's just out there. It's not realized profit. This is just profit. It's unrealized, meaning it's not my money yet. So I'm not even going to care if I give this back. I know where I'm at. I'm happy where I'm sitting, and I'm happy with the trade. So I'm going to give this time to play out, and we're going to see, does it want to hold a 21-day moving average, or does it want to break through my stop and through that 21-day moving average where we found support the last time? If it does, that's fine. Maybe this thing takes off without me. Maybe I stay in it, and we head to the north side. Next up, I have NVDA. Now, NVDA is really encroaching on my stop loss. My stop loss is just below this 10-day moving average. Now, it did not close below that 10-day moving average, even though it started to trail down in the after hours. I'm going to give this just a little bit more time. Hopefully, and I do say hopefully, in the concerning factor that there is a possibility that this thing will break through and be below my stop in the morning. If that happens, then I'm just going to wait until the open to see where it lands me. But right now we have about $466 left in this last quarter, mind you. This is one of my best stock trades of 2024 is NVDA. And why is it? Simply put, look at this beautiful trend line right here. And you can see where I got in the pre-market on higher volume. This thing pushed up through. I took about 20 shares, and then when I reached 1R first thing in the morning, I took off half of those shares, and I just held 10 all the way up to here. Biggest trade so far of 2024, landing me a nice solid grand in the bank account, and now much more since I have taken more shares off. Now we just have another $400 sitting in here. We're going to see what happens with it. Like I said, this stock was brought up to break even a long time ago. And I've held through all of this. When I seen this almost look like it was going parabolic on the daily, I had to exit some more. And I'm glad I did, because the very next day, it had a major pullback. So now I've been raising my stop up every single day on this 10-day moving average. I gave it a little room to breathe today while I was sitting in the hospital. I seen this huge pullback here, and I just allowed it to kind of pull back. And then I brought my stop up underneath that low, saying if it breaks through this, I'll wipe my hands clean of it and I won't have to worry about tonight's pullback. Well, now I have to worry about tonight's pullback because I'm still in the dang stock. But that's A-okay. I have a nice cushion, and I'd like to see this thing take off in the morning. I'd like to see it push. But as we spoke of when I first opened this up, we had a huge pullback on higher volume, the highest volume we've seen this thing trade almost, I want to say ever, but not ever, but very close to it, guys. So that's very concerning for me, and it should be concerning for anybody who has a long-term, I shouldn't say long-term position, but a short-term position in NVDA. So we'll have to see tomorrow what this wants to do. This is my final stand on NVDA before it breaks down. What I do want to see is this trend that's set up being broke through on the north side on higher volume. That's what I would like to see. That, I think, would be best case scenario right here, right now. You've seen it here first, a breakthrough. I mean, goodness, it makes me want to add to this play if it breaks through. And you know what? I just might do that. So can we get a bounce in the morning? That would be absolutely amazing. I'm seeing Tyler Root all up in this Mickey Ficky saying absolutely incredible and hell yeah. Hell yeah to you, Tyler Root. You know what reminded me of you, Tyler Root, is ROOT. This is actually a huge runner, and we went over this multiple times. I actually have my alert set above it, but this is Root stock. This is your stock, my dude. This is your stock. And Tyler, we're almost finished up here, so you and I can play some Warzone, because we gotta get the nerves out, baby. You were playing video games with me yesterday. It's my turn to go on your platform, but you got to carry me just like you did yesterday, because I am no good at video games, but it is a great stress reliever, so I'm pumped to do it. So ladies and gentlemen, that is about all I have for you, unless we have any questions, which I'm not seeing any in the comments. So thank you so much for being here with me. I do appreciate your time, and yeah, baby. So Tyler, let's go play some video games, right? All right, guys, peace, take care.